Hi, my name's Matt Geiger. My goal is to get you the full, unbiased story on issues, not the liberal story or the conservative story. While the U.S. has pursued free trade agreements since the end of World War II, lately people and politicians have begun to question the assumptions that underpin free trade. The contrasting stories on this issue make it even more important than ever that we have all the facts. So the purpose of this video is to help explain the common talking points on both sides of the free trade debate and give some background and context. The most common talking point from the pro-free traders is that free trade increases the overall economic growth for both parties to the deal. On top of that, they say it benefits consumers with lower prices, more options, and increased wages. Now, I'm not an economist, but on this issue, both liberal and conservative economists are in agreement that the statement in favor of free trade is true. A number of polls indicate that economists are essentially unanimously in favor of free trade agreements. It's rare for economists to agree on anything, but just last year, a group of 14 of the chairs of the President's Council of Economic Advisors, all the way from President Ford through Obama, so both parties, wrote a letter to Congress urging them to expand free trade. The letter reads, "International trade is fundamentally good for the U.S. economy, beneficial to American families over time, and consonant with our domestic priorities. That is why we support the renewal of Trade Promotion Authority, TPA, to make it possible for the United States to reach international agreements with our economic partners in Asia through the Trans-Pacific Partnership, TPP. Expanded trade through these agreements will contribute to higher incomes and stronger productivity growth over time in both the United States and other countries." The anti-free trade side of the debate says that free trade results in outsourced jobs, bankrupts domestic businesses, and increases inequality. And I found that argument is pretty valid too, because the very next line of that open letter to Congress that I just read says this: "Trade is beneficial for our society as a whole, but the benefits are unevenly distributed, and some people are negatively affected by increased global competition." Along those same lines, opponents of free trade worry about a race to the bottom in labor, where corporations will move jobs to the place with the cheapest wages, benefits, and labor standards. On the high end, one pro-labor think tank estimated 800,000 jobs have moved to Mexico as a result of NAFTA. Some politicians, like Bernie Sanders, cite this number, but the vast majority of studies say that NAFTA most likely caused slight job losses in America. Those reports usually found significant changes in jobs, though. In other words, we lost a significant number of jobs in one industry, in the case of NAFTA, that was mainly the automobile industry, but we gained most of them back in other industries that grew from free trade. Most economists who are for free trade admit that there are domestic job losses and businesses closed in the short term as a result of international competition, but they just think that the net benefits, which I read through earlier, vastly outweigh the downside. Now, I looked at a number of biased sources claiming that free trade agreements were the main driver of income inequality, but when I looked at the studies underpinning those claims, I found that they were often either misinterpreted or just plain wrong. One of the studies that was supposed to support free trade as a driver of income inequality concluded the following: "We find technological progress as having a greater impact than globalization on inequality." There's truth to the fact that free trade agreements are a driver of inequality, as indicated in that study and a number of other studies, but many economists believe that international trade is a small player in rising income inequality, with a host of other explanations playing a more dominant role, specifically the rise of computers and robots replacing low-skilled labor. An argument against free trade is that it has a negative impact on the environment. The first concern around the environment is related to NAFTA Chapter 11 and similar parts of other free trade agreements, which protects investors and investments in other countries by allowing private parties to sue governments when they violate international law. One of the consequences of this has been a bunch of incidences where corporations have sued governments for passing environmental regulations that interfere with their investments. In many of these instances, environmental concerns like pollution and waste have been involved, and lawsuits under Chapter 11 have been able to kill the regulations. This likely has also had the effect of slowing down or stopping altogether environmental laws that would impact foreign companies. But the flip side is this: in cases won by corporations, the losing government typically lost because they failed to treat foreign companies with a minimum standard of care. So in one example, they weren't provided with a clear and predictable regulatory framework. In a separate case, Canada banned only the import of a toxin, disproportionately affecting foreign companies. So the argument can also be made that environmental laws aren't affected as long as they're just transparent and apply equally to the foreign and domestic companies. Another environmental concern is a race to the bottom, in that producers will move to countries with the fewest environmental regulations to make more money but cause more environmental damage. The Commission for Environmental Cooperation, a body created to study the environmental impact of NAFTA, was particularly concerned about that, but they didn't find evidence of this or any other systemic environmental damage. They did, however, find an increase in pollution from the increased scale of trade. An argument made by the pro-free trade camp is that increased trade builds bonds between nations, reducing the risk of war. There are some studies that suggest that this is true, but I think there are just way too many variables to make anything other than a claim of correlation. That being said, in my opinion, and just in my opinion, this theoretically seems to make sense. For example, if we went to war with one of our major trading partners, it seems like it would be mutually assured economic destruction. An argument against free trade is that it increases our trade deficit. That is, we continue to import more goods into America than we make here and export out. This ends up involving a really complicated economic explanation, and even economists are split on it, but I'll give a really quick overview. Some economists see trade deficits as bad because it's a sign that we're borrowing from abroad and mortgaging our future, similar to our government deficit spending. Other economists, on the other hand, say the opposite, that trade deficits are actually good because they're associated with higher levels of income and investment and have historically gone up when the economy is doing well. And still a third group says that they don't even matter either way, they're immaterial. They're just an expression of what consumers want, whether that's domestic goods or foreign goods. It just doesn't matter. Given the intense split among experts, I would say the trade deficit shouldn't be used as an argument for either side of the debate. Another argument against free trade is that we're at a disadvantage because our trading partners don't abide by the same rules. Specifically mentioned is currency manipulation. Over the last few years, countries like China and Japan have bought up US debt at unprecedented levels, weakening their own currencies to make products they sell to Americans relatively cheaper. This means America buys more foreign goods and foreign residents buy less American goods. On one side, economists argue that this hurts US-made products and is the equivalent of a subsidy, creating an unfair environment where businesses can't compete. But some economists actually disagree, arguing that there's nothing wrong with what these countries are doing because they add to investment in America, and they benefit American consumers who can still buy the cheaper foreign goods. The end result is that, like many other issues among the experts, there really isn't an economic consensus. So here's my takeaway. On complex issues like this, we really need to trust in our experts when we can, and in this case, I'm talking about our economists. I see politicians trying to appeal to the emotions of the public on the issue of international trade specifically, harping on one element of the economy and acting like they have all the answers. But the economy is such a complicated web of relationships that you can't just pick out the elements that prove a point and discard the rest. Nobody in politics seems willing to acknowledge the nuance that's involved. We need to lean heavily on the economists to help sort out this complex web. There's still tons of disagreement in the field, but when there is widespread agreement, we need to listen. Thanks for watching.